Good day, and welcome to the QLogic Corporation second quarter fiscal year 15 QLogic earnings announcement conference call. Today's conference is being recorded. At this time, I'd like to turn the conference over to Jean Hu, Senior Vice President and Chief Financial Officer. Please go ahead.
Thank you, operator. Good afternoon, and welcome to QLogic's second quarter fiscal year 2015 earnings conference call. Today's call is being webcast with prepared slides that are available on our website at QLogic.com under Investor Relations. Joining me on the call today is Prasad Ramapalli, our President and Chief Executive Officer. Prasad will open the call with a discussion of the current state of our business. Then I will provide a review of our second quarter financial results as well as the guidance for our third fiscal quarter. We'll then open the call for questions. Certain of our comments today will include forward-looking statements regarding future events and our projections of our financial performance based on current expectations. These comments are subject to significant risks and uncertainties that could cause our actual results to differ materially from those expressed in these forward-looking statements. We refer you to the document that QLogic files with SEC, specifically our most recent Forms 10-K and 10-Q. These documents identify important risk factors that could cause our actual result to differ materially from expectations. We do not intend to update the forward-looking statements that we make today. In our second quarter earnings press release issued earlier today, we reported both GAAP and non-GAAP results. All of the references we'll make on our call today relate to non-GAAP results unless otherwise stated. A reconciliation of the GAAP to the non-GAAP financial measures is available on our website and Investor Relations. I will now turn the call over to Prasad. Prasad.
Thanks, Jean. I'm very pleased with our financial performance in the second quarter of fiscal 2015. We exceeded the high end of our prior guidance across all key metrics, and based on our design win and qualification activity, we see a strong growth trajectory heading into the second half of fiscal 2015. Driven by our compelling product portfolio that enabled us to take market share and our consistent operational execution, we delivered revenue of $127.5 million, up 7% sequentially from the first quarter. Our revenue from advanced connectivity platforms increased 10% sequentially and was driven primarily by an increase in revenue from fiber channel adapters of more than 5% and an increase in revenue from Ethernet products of approximately $5 million. In addition, our net income increased 19% sequentially to $22 million, or 25 cents per diluted share in the second quarter. Both revenue and net income per share were above the high end of our guidance ranges. Moving on to our business update. We continue to execute well in the fiber channel market and are seeing clear indications that the SAN connectivity market is beginning to stabilize. Our revenue from fiber channel products grew sequentially and year-over-year in the September quarter, and we expect sequential growth again in the December quarter. Based on the recent market share report from the Dell'Oro Group, we gained revenue share in the fiber channel adapter market in the first half of 2014 and currently hold a total revenue share of 58%. We gained approximately 4 points of market share from calendar year 2013 and now have nearly 18% point lead over our nearest competitor. With the sequential revenue growth for fiber channel adapters and more than 5% in the September quarter, we believe that we are well positioned to increase our market share leadership in 2014. In addition, we are well on track to achieve our 11th consecutive year of fiber channel adapter market share leadership. Our fiber channel technology is proven, with more than 16 million adapter ports shipped to enterprise data centers worldwide, making QLogic adapters the SAN server connectivity products of choice. We also continue to see strength in the storage connectivity market for fiber channel, especially with flash storage arrays that are optimized for high-speed data centers. Fiber channel is well suited to meet the more demanding I/O requirements of all flash arrays, and we have been able to leverage our strong position in the conventional storage array connectivity market to win a significant majority of the all-flash array designs. The all-flash array storage market is forecasted to grow at over a 50% CAGR to a projected multi-billion market in the next few years. As it does, it will drive proportionately greater connectivity needs. We are well positioned to benefit from that growth by our design wins. Our success in the all-flash market is illustrated by design wins at Pure Storage, Cisco, EMC, Violin, SolidFire, and Tegile, as well as others. We are on track to becoming a leading I/O connectivity solution supplier for this fast-growing market. We remain very confident about our prospects for a continued share in technology leadership in the overall fiber channel market. Our Gen 6 fiber channel product, which includes 32 gigabit links and many important new features, is in-house and undergoing engineering bring-up testing. Early progress is going so well and ahead of plan that we have already sampled the product. We are tracking to broader sampling this quarter and production units in calendar year 2015. We continue to believe we have a significant time to market advantage on Gen 6 fiber channel and look forward to meeting our server and storage connectivity customers' increasing need for performance, connectivity, and value. Our strategic technology and marketing alliance with Brocade is allowing data center managers to extend the power of fiber channel storage area networks with enhanced end-to-end value. This week, we announced a comprehensive set of new end-to-end industry-leading features for our Flex Suite Gen 5 adapters. These are the first results of the strategic technology alliance with Brocade announced in January 2014. QLogic's end-to-end enhancements extend Brocade's Fabric Vision technology by enhancing Brocade ClearLink diagnostic capabilities, simplifying and accelerating SAN deployment, and improving overall quality of service. Specifically, new QLogic diagnostics integrate with Brocade ClearLink to help maximize production environment uptime and performance. Dynamic fabric provisioning helps enterprises quickly and easily meet growing business demands. These new enhancements also allow organizations to rapidly scale server virtualization without compromising service-level agreements by extending quality of service from the fabric to the host. QLogic's suite of end-to-end features fully extends our connectivity management tools over the network fabric and will be available with QLogic's release in November. To scale these end-to-end solutions, we are jointly planning to go-to-market initiatives with our major system OEMs, especially in high-growth emerging markets such as China. This will include joint marketing and promotional programs as well as field sales collaboration. To close on our fiber channel product and market update, I want to highlight the recent Intel Grantley server launch by the server vendors. Next-generation servers based on the new Intel Xeon processor E5-2600 V3 product family represent a tremendous opportunity for QLogic Gen 5 fiber channel adapter products. More than 25 of our fiber channel adapter solutions are being deployed with the world's top server manufacturers on these new platforms. Our initial checks with our OEMs show that the ramp is healthy and meeting or exceeding our expectations for fiscal 2015. Our Ethernet products have demonstrated tremendous momentum since last quarter as we solidified our Net Extreme 2 product line with our OEM customers. Based on recent market share reports from the Dell'Oro Group and Crayon Research for the second quarter of calendar 2014, we held the number 2 position in market share for 10 gigabit Ethernet adapters and ASICs. With the significant revenue growth we achieved in the September quarter, we are riding on very strong momentum and have a deep pipeline of growth opportunities. We believe that we'll expand our market share and are well positioned to outpace the revenue growth rate of the 10 gigabit Ethernet market. With the recent Intel Grantley server launch, we'll be deploying more than 45 new 10 gigabit Ethernet products with the world's top server manufacturers on these new platforms in the next 12 months. With the Grantley server shipment ramp and significant increase in 10 gigabit Ethernet attach rate, we expect continued momentum and further strengthening of our number 2 position in this market space. In addition, we are seeing significant demand for channel partners for our enterprise-class 10 gigabit Ethernet adapters. In response to this demand, we recently launched worldwide availability of our next-generation 10 gigabit Ethernet adapters to end users, managed service providers, and data center operators through our authorized channel partners. With this launch, QLogic will now provide a comprehensive suite of enterprise-class networking solutions with extended reach for the low, mid, and commercial segments of the enterprise and service providers for the public cloud. We'll continue to build our growth momentum in the Ethernet market by delivering innovative technologies to market. I'm very excited to announce that we are now sampling our next-generation Ethernet adapters with Tier 1 server and storage OEMs. This is the industry's first 100 gigabit Ethernet-capable controller. It is also the first controller that will support the emerging 25 gigabit Ethernet standard and the first controller that is a true deep duplex dual-port 40 gigabit Ethernet product with a PCIe Gen 3 by 16 host interface. This new controller covers the breadth of Ethernet speeds from 10 gigabit, 25 gigabit to 100 gigabit Ethernet with fully offloaded support for iSCSI, FSOE, and low latency services like RDMA over both RoCE and iWarp. In our continued effort to be a first mover in Ethernet technology innovation, we also announced that we'll be joining the 25 gigabit Ethernet Consortium. The consortium is an association of high-profile companies devoted to developing a new standardized specification to allow data center network transmissions to run over a 25 or 50 gigabit Etherlink protocol. 25 gigabit Ethernet enables 250% higher bandwidth with the same switch port density in comparison to 10 gigabit. In addition, 50 gigabit Ethernet provides 2x the switch port density and 25% higher bandwidth in comparison to 40 gigabit. This is very disruptive and attractive to web-scale data center operators and managed service providers as they get better performance at half the cabling costs in fault-tolerant configurations. In support of this network industry initiative, we'll be working closely with the promoters of the consortium, including Arista, Broadcom, Google, Mellanox, and Microsoft, to validate and demonstrate end-to-end 25 gigabit and 100 gigabit Ethernet solutions from a customer perspective. Our Ethernet solutions are based on a common, flexible, and programmable architecture that rapidly addresses our customer needs and reduces their time to market. This architecture has laid the foundation for us to deliver a rich spectrum of intelligent offload features based on emerging industry protocols like RoCE and NVMe. This protocol portfolio will allow us to bring forward differentiated networking solutions for emerging trends like software-defined data centers, converged infrastructure, and network function virtualization for the enterprise and cloud markets. In summary, we are in a unique position to capitalize the growth of 10 gigabit Ethernet adoption as a sweet spot in the enterprise with our differentiated product line and be a first mover on enabling 25 gigabit Ethernet adoption. To underscore this point, our share of 10 gigabit Ethernet port shipments has already grown to 21% in the second quarter, and we expect this momentum to continue on a healthy pace with the Grantley cycle. Now moving on to an organizational update. To further enhance our ability to execute on our strategic objectives, we have continued to build upon strong leadership team. We are very excited with the recent appointment of Milind Karnik to the position of Senior Vice President of Global Engineering and Veena Leet to the position of Senior Vice President of Human Resources. Milind has more than 28 years of executive leadership in the server and storage industries, including Senior Vice President of Worldwide Engineering at LSI's Enterprise Storage Group and Silicon R&D Division, Vice President of Product Test at Dell, and General Manager of the Platform Validation and Engineering Group at Intel. Milind brings a unique set of technical leadership and management experience that will enhance our executive team. Veena brings more than 15 years of human resource management experience and joins us from EMC, where she served in a number of senior management roles. Most recently, Veena was Vice President and served as the COO and Chief of Staff to the Executive Vice President of Human Resources. In summary, I'm very pleased with our accomplishments in the first half of fiscal 2015 and expect our momentum to continue. A strong statement of our confidence is the board's recent authorization of a $100 million stock repurchase program. This demonstrates our positive view for our long-term business growth prospects and financial outlook and emphasizes the board's commitment to enhancing shareholder value. We are confident of maintaining our revenue and profit performance in the mature fiber channel market by continuing to deliver superior products, gain market share, and capitalize on new storage connectivity opportunities, especially with flash. We are riding a wave of strong design wins in the enterprise Ethernet market with solid growth prospects, and we are very well positioned to gain market share with the upcoming Grantley cycle. We will continue our solid discipline in driving operational efficiencies across the company to expand the operating margin pool and free cash flow. This will allow us to deploy our resources to develop new offerings that capitalize on our unique position in the server and storage connectivity markets and to contribute to our future growth and success. I will now turn the call over to Jean to provide a summary of our second quarter financial results. Jean?
Thank you, Prasad. Our revenue in the second quarter was $127.5 million, up 13% from the $112.6 million recorded in the same quarter last year. This revenue was above the high end of our guidance range of $121 to $127 million provided during our first quarter earnings call. Our second quarter revenue from advanced connectivity platforms, which are comprised primarily of adapters and silicon for server and storage connectivity applications, were $114.9 million, up 22% from the $94 million recorded in the second quarter of last year. Second quarter revenue from legacy connectivity products, which are comprised primarily of switch products, was $12.6 million and declined from $18.6 million recorded in the second quarter of last year. This decline was consistent with our expectation and what we expect the revenue from this product to continue to decline over time. Our first quarter gross margin of 63.3% was better than the guidance that we provided during our first quarter earnings call. Next, I'd like to cover our second quarter operating expenses. Total operating expenses were $55.2 million, up from $54.2 million reported in the second quarter of last year. Engineering expenses in the second quarter of $33.2 million increased from $32.5 million last year. Sales and marketing expenses in the second quarter were $14.4 million and declined from $15.2 million last year. G&A expenses in the second quarter was $7.6 million. Operating income in the second quarter was $25.6 million, up 13% from the $22.6 million last year, yielding 20.1% operating margin. To put it in perspective, we have delivered an incremental $21 million of revenue in the first half of fiscal 2015 compared to the prior year period. We converted this into a $5 million year-over-year increase in operating profit, leveraging our business model to expand our operating margin pool with our faster-growing Ethernet business. Our second quarter net income of $22 million increased 10% from last year. This represents a net profit margin of 17.3%. This is the 77th consecutive quarter of profitability for QLogic. Our second quarter net income per diluted share of 25 cents was above the high end of our guidance range of 19 to 24 cents provided during our first quarter earnings call. Turning now to our balance sheet. Our cash and marketable securities were $277 million, or over $3 per share at the end of the second quarter. We continue to maintain a very strong cash position and have no debt. During the second quarter, we generated $28.4 million of cash from operations. Now moving to our near-term outlook for the third quarter of fiscal 2015. We expect total revenue to be in the range of $134 to $140 million. At the middle point, we expect revenue from advanced connectivity platforms to be up approximately 9% sequentially. We expect revenue from legacy connectivity products to be approximately $12 million. Gross margin is expected to be approximately 62%, and operating expenses are expected to be approximately $56 million. At the middle point of our guidance, we expect our operating margin to be approximately 21%. When combined with a projected tax rate of approximately 15%, and a diluted share count of approximately 88.5 million shares, we expect to achieve non-GAAP earnings per diluted share of 26 to 30 cents in the third quarter. Actual results for future periods may differ materially due to a number of factors, including those outlined during the course of this conference call in our filings with the SEC and in the disclaimer statement at the end of our earnings press release. This concludes our prepared remarks. Operator, we're now open the call for questions.
Thank you. If you would like to signal with a question, please press star 1 on your touch-tone telephone. If you're joining us today using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Again, that will be star 1 for questions. The first question will come from Joseph Wolf with Barclays.
Thanks. I had one, sector question and then one a financial question. If my math is correct, it looks like the fiber channel business was actually a little bit stronger than when you gave guidance in the last quarter. And I'm wondering if you could just walk us through, you did a little bit on the in the prepared remarks, but just some of the end markets that are doing well, and if those are continuing or you're seeing more of a broad-based kind of response to, what was troughing revenues in the core business.
Yeah, surely. This is Prasad. Let me take a stab at it, and I'm sure Gene can add more color to it. The primary drivers of our fiber channel growth are really twofold. One is obviously we'll continue to gain share in this market by virtue of our compelling products and our go-to-market activities. But in terms of market segment gains, in terms of what's happening in the market, number one, the onset of flash. On flash arrays, all flash arrays are growing at a 50% CAGR, and we have 90% of those design wins. And as the flash arrays ramp, we are seeing a significant monetization of our design wins at this point in time. We are also seeing a significant gain on end-to-end solutions working with Brocade that result in a fabric-based value add with our connectivity capabilities going forward. So looking at market share gain, looking at where the target market is going, looking at a slightly less decline on the server side, as well as future end-to-end solutions that we are going to monetize, we see a pretty stabilized fiber channel market for us going forward.
Okay, and then I think that with the share buybacks, there was a hesitation on the location of the cash geographically. Can we go through that where that is right now? Is the cash flow that was generated in the quarter all going into the United States, and is that helping provide a faster return to share buybacks than I had expected?
So at the end of September quarter, about 20% of our cash is based in U.S. Still, we have 80% of cash, offshore cash. But I think going forward, we really are going to continue to generate a strong cash flow. Of course, portion of the cash flow will be generated offshore. We also have a credit facility. If we need to borrow, we can borrow to buy back shares too. But we're quite confident with the overall cash flow generation capability of the business, and also, 30 to 40% of cash will be generated from U.S. too.
Okay, so I guess given the share count guidance, we're not looking for. Could you talk about just the pace of how you expect to go about the buyback?
We're going to be very consistent with our track record. If you look at the QLogic back in last 10 years, we have returned a significant amount of cash to shareholders. We tend to really just look at our stock value and make a determination during the quarter, purchase over different quarters. So if you look at the $100 million approval we got from our board of directors, we certainly have next 12 to 18 months to do it.
Okay, great. Thanks, guys.
And the next question will come from Katy Huberty with Morgan Stanley.
Hey, thanks. Good afternoon. Congrats on the quarter and guidance. On the advanced connectivity business, guidance up 9% sequentially in the December quarter. That's certainly better than the flat trend you did last year. What do you consider to be normal seasonality? And if this is better than normal, what's driving that? Is it the same two factors that Prasad just walked through? Is there something different going on in December? Then I have a follow-up.
Yeah, Katie, let me address that, and I'm sure Gene can add in. On the fiber channel adapter side, we clearly see seasonality, and that's the 7% sequential growth that we are seeing there. The real kicker for us is the very significant ramp of our Ethernet product, which is again going to grow at 22% growth rate sequentially. And so when you do the math of a continued strong seasonal fiber channel adapter rate, which is growing, at the same time an Ethernet product line that's going gangbusters for us at another 20% sequential growth, that results in above average growth for the year end for us.
Okay, and then
yeah, that's clear. That's exactly what it is. Yeah.
Okay, and then on the server-related business, I imagine you're seeing some orders related to Romley. Do you have visibility yet as to whether those are being pulled by real demand, or are we still in the stages of inventory build and preparation either ahead of or concurrent with launches? I'm just trying to get a sense for whether we really know yet whether this is going to be a robust cycle or if the orders were just reflective of OEMs getting ready heading into next year.
Katie, just to clarify, I think you were asking about the Grantley cycle, not Romley,
yeah, sorry,
right?
Grantley. Yeah.
Yeah. So we've obviously poured heavily into this on all angles with our checks with our Tier 1 OEM customers and also what we are seeing in the channel. For the Grantley cycle, Katie, overall our view is that this Grantley launch is driving a pretty robust server upgrade cycle, both in enterprise and public cloud segments, specifically the telco MSP market. I mean, as you might have noted, Intel reported the other day that 10% of its x86 DP or two-socket platforms have already toggled to Grantley servers since 5 weeks from the GA announcement. And in my checks with 2 of the 3 Tier 1 OEMs who have already started shipping Grantley servers, they indicate that demand is brisk with a healthy ramping pipeline in calendar Q4 with some very large orders from telco and MSP cloud service providers. Any short-term shortages that we've heard of on and off on DDR4 memory have largely been addressed in the allocations, at least for these Tier 1 OEMs in our checks. So looking at everything, we think Grantley is off to a very healthy start. We think that's going to give us the uplift that we're looking for in calendar Q4. And that seems to be corroborated by some of our pickup even in the first month of this calendar.
Thank you very much.
And our next question comes from Bill Shop with Goldman Sachs.
Okay, thanks. Could you give us a bit more color on how significant the current server cycle should be for the shift towards 16 gig within Fiber Channel? How are you thinking about this trend as a percent of the mix over the next several quarters? And I guess related to that, how do you expect that to impact the Fiber Channel business in terms of margins and the ASP per HBA?
Yeah, sure. So let me give you the big picture, and I'll dive into the specifics. There are 2 key disruptors that we see. One is clearly a technology disruptor with flash, as I alluded to earlier. With the onset of flash, specifically on all-flash arrays, there is a propensity for Fiber Channel being the primary protocol as the attach rate for all-flash arrays, and they are clearly growing, almost doubling quarter to quarter in some of our Tier 1 OEMs. And the CAGR is 50% over 3 years. So we are seeing Fiber Channel attach rates and growth from that segment in a significant way. With regards to Grantley, with Grantley's two-socket systems where you have 20-plus cores, we are looking at very large virtualized farms and further consolidation of large virtualized clusters. Translated, that means we're going to have a very high I/O density per core that needs to be supported, and that is going to, again, drive for a catalyst in progression from 8 gig to 16 gig in Fiber Channel technology adoption. Today, when we look at Q1, we see about 16% of adoption on 16 gig fiber channel, and by the end of the year, we expect that to be about 20%, and perhaps grow further once Grantley goes into full swing. So that's really our read, and almost every vendor or a tier 1 customer that we know is now supplying products or systems, in our case, storage systems or servers that are Gen 5 compliant or 16 gig compliant.
And given the large buyback authorization and your current U.S. cash position, should we assume that this signals that your M&A plans are going to be fairly muted for at least the foreseeable future?
I think we always look for different merger and acquisition opportunities, but in the past we have tended to be very disciplined in how we do M&A and also tend to be just bolt-on acquisitions. So if you look at our balance sheet, we have a very strong cash balance, and the business continue to generate a tremendous amount of cash. So I think we can have a good balance between investing in the business and also return cash to shareholders.
Yeah, to add to what Gene said, I think the key word here is a balanced approach, and our portfolio and our cash hoard really enables us to do both, and we plan to execute on both.
Great, thank you.
And our next question comes from Aaron Rakers with Stifel.
Yeah, thanks for taking the questions. A couple if I can as well. Going back to the Grantley server cycle, you had mentioned in your prepared remarks about 25 fiber channel solution wins. If I look at the server cycle today and those solution wins, how would you compare them relative to your positioning or your share position in the prior Romley cycle?
Well, Aaron, as I alluded to earlier, we started 2013 with 58% market segment share. We are currently at 58% market segment share, and we are about 18% ahead of our competition in this space. And we feel pretty strongly that as we execute to our plans through the end of the year, we'll gain more share. With regards to Grantley accelerating or providing more opportunities, clearly the catalyst or the move to 16 gig by the nature of how the technology is going to be deployed is an opportunity for us because we have some pretty significant products in that space. So all in all, I feel pretty good in that area.
And also to just add to Prasad's comment, on the storage OEM customer side, we have been talking about it. We do have a significant majority of design wins going forward with our target ASIC business, which certainly it's not something we had in the previous cycle.
Okay, and you mentioned also 32 gig and alluded to a time to market leadership position looking into calendar 15. How do you think about your time to market lead? I mean, are we talking 6 months? Are we talking longer than that? Just trying to think about that expectation as we look to those products next year.
Well, I'll just say this: when we get to 32 gig, we're going to be at least 12 months plus ahead of our competition, and that's a conservative estimate. Okay, so we are really looking really good in that space, and like I said, the bring up has been fantastic for us. The links were up, the OS was up in less than 3 days. We've already been sampling this product with our customers, so we look really solid in when we think we're going to go GA on this, and by mid 2015 we'll have our quad 16 gig product on this particular technology, Gen 6 technology there, and our 32 gig product by mid 2016.
And then final question, if I can, on the 45 design wins that you had referenced on the Ethernet side, how many of those are actively shipping in volume today, and how many do you expect to be shipping by the end of this current quarter?
Yeah, the only products that are not shipping are clearly waiting for IBM's GA, right, which is going to happen in the December timeframe. The rest are HP and Dell and others, and so I would say a majority of the 45, and I'm taking a calculated estimate here, 35 plus are already shipping.
Okay, thank you.
They're just waiting for December to come around. and we'll be full board on all of them.
Great.
And the next question will come from Amit Daryanani with Royal Bank of Canada Capital Markets.
Thanks. Good afternoon, guys. Two questions for me. I guess the first one's really on gross margins. They were actually much better than we had expected, or you guys had guided for in the September quarter. I'm curious, though, as you get into December quarter, given the fact that Fiber Channel is actually going to accelerate a little bit and Ethernet may sustain this 20% growth, why do you guys think gross margins are going to go down by 130 basis points or so sequentially? Like, what are the offsets over there?
I think if you look at the Q2 gross margin, both our Ethernet and the Fiber Channel business performed really well. I think the Fiber Channel business actually the Fiber Channel adapter business grow 5%, which is much better than we expected, 2 to 3%. Ethernet business also grow, incrementally $5 million, which was better than $3 to $4 million we expected. So that was really healthy. And if I look at the Q3, our guidance, just like Prasad mentioned earlier, the Fiber Channel adapter business actually is going to grow 6 to 8% sequentially, so it's very healthy growth. But the Ethernet is growing much faster, so overall mix certainly will drive the gross margin. That's really the primary major driver. Is the Ethernet business is going to account for more percentage of our total revenue.
Yeah, I mean, you look at 22% sequential growth on a base that's already grown by 22% in the previous quarter. So, the weightage this is just weighted math.
Yeah.
Say it.
I think the key thing, Amit, is really when you look at our operating margin middle point, the guidance is 21% versus 20% in Q2. So we are growing our operating margin pool. I think the gross margin of 62 to 63%, that probably the range where we are looking at in the next few quarters.
Yeah, if I could just add, I mean, you can be assured that we are planning our entire product portfolio in the 62 to 63% in the near term, and forward-looking, we'll do some technology differentiation in terms of cost that further accelerate our gross margin. But in the next 12 months, we'll be in the 62 to 63%. But what I would consider that you watch for is our operating margin dollars. That pool is going to expand as we continue to accelerate our top line in that weighted mix.
Got it. And then I guess as a second question, you guys are obviously seeing really good demand trends in September. Sounds like they're continuing in December. Maybe any sense that there's some part of this may be due to an inventory build ahead of the IBM Lenovo transition potentially? Do you think that was a benefit to you guys at all? And then broadly, I'm curious, given all the macro concerns that have come up, how did linearity track for you guys through the quarter? And is the month of October off to any different of a start than you guys had expected?
We are not seeing any major blip in October for any of the reasons that you mentioned. We actually experienced some large deals with the IBM Lenovo flip that's occurring, especially in the federal market. But nothing that we are looking at October that gives us any cause for reconsidering our horizon or anything like that.
Yeah, I think the key thing is that we do have a unique product cycle. All the Ethernet Grandly design wins we have and ramping up, it's really new, so it's an incremental opportunity for us.
Yeah, I mean, if you're alluding to the microchip announcement and the inventory buildup and the situation that was reported, we don't consider ourselves as being part of that business. And if you look at Intel's earnings, they pretty much reiterated the same thing. I mean, we are in a different category of the business in the enterprise space, which really is in the dynamics of the Grantley ramp and a virtuous cycle of upgrade that I think is going to benefit the whole ecosystem.
Perfect. Thanks.
Thank you.
And next will be Jung Pak with BMO Capital Markets.
Hi, thank you. Looks like your gross margins are going to be impacted by the Ethernet mix. Can you tell us what percentage of your revenues are Ethernet, and what are your assumptions for Ethernet revenues exiting calendar year 15 or fiscal year 15?
Yeah, I think we have outlined our Ethernet business really ramping up quickly. So from last quarter's level, we guided over 20% increase in the current quarter. I think we have not given the detailed percentage of Ethernet revenue as part of the overall revenue. But I can assure you going forward, Ethernet is going to continue to show strong momentum. So it's going to be trending as a higher percentage of our revenue, probably high 20s sometime in next year.
Okay, yeah, just to add, if you step back and look at the total Ethernet connectivity market, by 2017. This is roughly a $700 to $800 billion SAM, and it's seen as, at least the 10 gigabit Ethernet segment is seen as growing at 17% CAGR. Our projection of our products, especially our 10 gigabit Ethernet flagship, is going to be far outstripping the market growth rate. And when we launch our next generation technology that I alluded to on 25 gigabit Ethernet and 40 gigabit, we expect to only accelerate that growth, outstripping the market growth rate. So again, I would say, look at the overall top line revenue growth. Our discipline will continue to be there in the gross margins in the 62 to 63, and the operating margins is where the real cash is going to come in at 21 to 22% going forward with continued expansion.
It looks like there's some positive trends on your fiber channel business with all-flash array demand and the Grantley cycle. Can you help us understand what your thoughts are on your fiber channel revenue growth in calendar year 15?
Yeah, so we typically don't give the long-term guidance, but overall, Prasad mentioned earlier, we do see stability of fiber channel business, and we are gaining market share. So overall, I think we'll continue to gain market share in calendar 2015, and more importantly, we do have a very strong design wins in the target ASIC business, which are ramping up in calendar year 2015. So overall, I think our fiber channel business, we feel quite positive about the stability and potentially even some growth in 2015.
Yeah, just one more point to add. As I said, our key partner, Brocade, stated that the fiber channel switch market, or the fabric, is growing 0 to 2%, right? And so with the end-to-end solutions that we are building, as we drive our go-to-market strategies that will start coming into full swing in calendar 15, we expect to see the benefit of that. So when you look at the math on continue to gain share, continue to expand revenue from target markets where we have 70% or greater design wins, riding all-flash arrays where we have 90% or greater design wins, and then the benefit of partnering with Brocade on the fabric, we think we are going to be flat, if not slightly up year on year. I can't give you specific numbers, but we see the business stabilizing, and that's really the definition that I'm using of stability, where we're not going down, but we are flat, if not stable, and maybe even going slightly up.
That's very helpful. And lastly, Prasad, any updates on your thoughts on server unit growth related to the end of support for Windows 2003? Thank you.
Yeah, I spoke to this in the last call, and really my estimates and position hasn't changed. As I recall, there is a virtuous upgrade cycle that's happening with Windows 2003 upgrade. The numbers float based on what kind of consolidation assumptions you use, but my conservative guess would be this is going to give us a 5,000 to 6,000 server uplift in terms of upgrade that will benefit us in terms of additional connectivity.
Thank you.
The next question will come from Vlad Rom with Credit Suisse.
Hi, thank you. I appreciate it. Prasad, so if the third quarter data isn't out yet, but if you look at the second quarter data, it looks like fiber channel ports declined in that quarter, and that's pretty consistent with trends. And then if you actually look at ASPs, even as 16 gig has come online, net aggregate ASPs have actually also continued to decline because 16 gig has come down. So how are you thinking, and despite the mix-up, right? So it's going from, basically incrementing about 3% per quarter in share versus the broader fiber channel market. So how are you thinking about the pricing dynamic? Does the 16 gig cause an uplift at some point, or is it basically just a source of stability for pricing? How are you thinking about that?
Yeah, in our roadmap, as 16 gig gets to mainstream, and I alluded to the fact that 16 gig is probably going to be 20% of the overall adoption by the end of this calendar year, we clearly see value in our gross margin agenda going forward as we drive to Gen 6 in our technology roadmap. And we're going to be having an Analyst Day sometime in February of next year where I'll amplify more on how we are going to deliver yet higher gross margins in the fiber channel space with some of our technology innovations in this space.
And Bilal, I think you mentioned about calendar Q2's fiber channel number, but if you look at our announcement today about our fiber channel adapter going up more than 5% sequentially, and also our competitors' pre-announcement about their fiber channel business, I think by the end of the September quarter, when the numbers come out, you will see a different picture too. I think that basically is what Prasad mentioned earlier. We do see the fiber channel adapter market start to have a stability going forward.
Yeah, across our competitor and our partner Brocade and us, our read of the market dynamics is it's not just a straight correlation with server units and attach rates anymore. The market is changing. There is the growth of the fabric, driven by a number of factors that Brocade is representing, and more importantly, the onset of flash, all-flash arrays that are growing in. Today it's a $650 million market going to multi-billion. I think the numbers are about $6.4 billion in 3 years, and that's, I think, is conservative. I was talking to some of our OEM customers just the other day, and they're talking about sequential volume growth doubling in these systems. And that's extremely good news for us because we have 90% of those design wins. And so we're going to continue to ride that, and I think the algebra is going to serve well for us as the target side rate improves, and when Grantley shows up, we'll have 16 gig adoption, and on both counts, I think we will get to a better place on stability.
Great, that's helpful. And then how are you thinking? So we have December quarter guidance, and it sounds like IBM's going to release their mainframe in the first quarter of 2015. And to what extent does that cause an uplift on the fiber channel side?
As you know, we are more focused on x86 side. So I think our business, fiber channel business, is more related to x86. So we don't have much visibility on the other side.
And then also just on the Ethernet side, can you talk to the extent that the contracts now in place that are coming through the revenue line, those were won by Brocade, right? So now you're in market looking for design wins, right? Is that a good way to think about it?
Oh, you're talking about our Ethernet business? That's the acquisition of Broadcom's business?
I think you meant Broadcom, right?
Yep, sorry, yep.
Yeah.
So, and that's, their deals are revenuing for you right now, right? Is that how we should think about it?
So, as you recall, right, we acquired the whole business, including team, technology roadmap, and the product line, and the design wins associated with the business. So it's really, we have integrated their business with our Ethernet business. I think the majority of design wins, and we inherited, and we're pushing forward and getting more design wins actually through the overall business we acquired.
Yeah, the product line that we acquired is the NX2 product line. It's our IP. We've essentially had 20 plus active programs through the grantee cycle, now resulting in 45 plus products. And in many of those sockets with these OEMs, we are in default position. Default meaning that that's the preferred positioning of our tier 1 OEM customer in terms of a preferred SKU to our customers, to the end customers. So, yeah, I mean, that's the reason we acquired the product and the technology, because we wanted to break through and get to sizable critical mass in the Ethernet market and start leveraging our innovation on top of that. And I think the strategy is paying off, as you can see from the numbers.
Okay, that makes sense. But the revenue that's actually the Ethernet revenue for this quarter, were any of those deals put in place under your ownership, or is that basically the trailing Broadcom deals, and then you're going to have to re-up the future deals? And when do you, if that's the case, when do you expect those deals to start coming through? Is it more early next year, or is it more the end of next year?
Yeah, I don't know the reference to deals, but at this point, we have ownership of the product line, and the design wins are the design wins are a set of incumbent design wins that we are scaling to with our E3 or current product line that's going to, again, move to the next generation product with 40 gigabit and 100 gigabit Ethernet. But essentially, it's our roadmap with our customers going forward, and the numbers speak for themselves.
Yeah, and the design win is a continuous process. So even through the acquisition, after we own the business, we continue to win designs, programs. So I think it's a continuous process, as you know, with all the OEM qualifications. It takes a while.
Yeah.
Yeah. So maybe we are missing your question here, but
yeah, I'm just trying to understand.
Would love to chat offline on the one-on-one.
Yeah, sure. Let's do that. Yep.
Yeah.
And that does conclude the question and answer session. I'll now turn the conference back over to you for any additional or closing remarks.
Thank you. This concludes our call for today. We look forward to updating you on our progress next quarter. Thank you so much for your time, and goodbye.
Thank you. That does conclude today's conference. We do thank you for your participation today.